Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, September the 13th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses so that we have a plan in place for whatever the market throws at us, and then we adapt our trading to what the market is showing and the plan or the hypo that is correspondent with that. This is a subscription room, so if you're interested in checking us out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We are retail traders operating within a self-organized learning environment. We do everything live here in the go-to in the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday our main hypothesis was a rotation up and then failure somewhere in the 29 to 34 area, and then rotate down and go down and take out that overnight low down at the 2100 and push through to test the 2000s. What really happened was hypo 4, which was a failure to break out or a false breakout below and then rotate up and get into a trend day and come all the way back up into the naked VPOC and targeting that 60.25 naked VPOC, and that's exactly what happened. We could not, open up auction out of range, and then we got back inside of the prior day, tested the midpoint. This was the trade of the day. I didn't take it. I had to wait a little bit longer, but basically if you would have got long on the mid trade, you could have stayed in that thing all day long. Yesterday's full session is 55.75 points. The RTH was 45.5. We're starting to get some expansion. Our weekly ATR, our 20-period ATR for the weekly is 48.925. So we've actually expanded the weekly range already within the first day of the week. We've gone to 55.75 points. So let's take a look at the news quickly. There's not a lot on the news today. There's the 30-year bond auction at 1 Eastern, and then we've got federal budget at 2. Other than that, there's not a lot of news, but there's certainly headline news that could come out. Let's just take a step back here and take a look at the macro to micro. I always like to start with a monthly candlestick chart. I use a 9 EMA and a 20 SMA. I'm looking for slope and separation for the strength of the trend, where the trend is being violated. Beautiful multi-year upward trend, very strong, and then at the end of 15, beginning of 16, they challenge it, and then they go and take it back. We're getting slope and separation to the upside on the monthly. We have come down and tested the 9 and bounced off it so far. So the overall trend is up on the monthly. On the weekly, of course, we had that long run of 8 weeks in a row of bullish weeks. It's only happened now 3 times in the last 20 years. We thought we were going to get the 9th week. That's only happened once in 20 years, but it didn't happen. And of course, we rolled over and we came down on Friday, tested the 20 SMA from above, and then yesterday we rallied right back up and challenged the 9. But so far we have failed to get back above the 20. So we are seeing some weakness on the weekly. On the daily, of course, we have this bearish engulfing. We took back, I don't know how many days, 30 30 days, something like that, in one day on Friday. And then we got a railroad track that is, took almost all of it back and challenged the 9 from below. And now we've rejected the 9. So we still are in this downward trend that started on Friday, and you see we've got slope and separation to the downside. On the 4-hour, you can see that we've come up and we've challenged the 20 from below, I should say, and then failed and come down, and now we're below the 9 and the 20. Now there is a cup and handle formation forming here. Here's the right and the left rim. Let's just check to see if the retracement has been big enough yet. It is, whoops, it is right on the 38.2, so we have a valid cup and handle formation. It will remain valid until we get below the 2120 area. And I caution on this one simply to not try to front run this pattern. Okay, wait for the breakout of the 55, 56 area to take this pattern. Doesn't mean you can't get long on other setups, but this could fail, okay, based on the weakness that we've seen. And if we draw the measured move on this, this takes us right back up into the September all-time high. So the 61.8 is target is 2190.82. So call it 2190.75. Our September all-time high, the unadjusted high, is 2191.50. So if we can get back above the right rim, you've got a measured move. And then the 100% measurement is the 1179. I would look at the rule of 10 if we get into the 22 and a move up into 2210. But again, I caution you on this pattern not to try to front run because of the fact. Let me just get rid of all this, all these drawings. We are still in a downward trend on the 4-hour intraday. We're below the 9 and the 20, so we're still seeing some weakness. As we move down into the smaller time frames, again, we've got a move down below the 9 and the 20 and a possibility of a start of a downward trend. We've got a naked cross down here on the 1-hour at 2111.25. The trend is not, we're not getting a lot of slope, but we are getting some separation, so this could be the start of a downward trend or basically a continuation pattern. Going to the 30-minute, you can see that it's much stronger. We've got good slope, we've got good separation. They tried to get a hold of, get above the 9, but failed, and now we're getting continuation to the downside. We have another naked cross down here at 2104. 50. Going to the 15-minute, you can see again we're getting a continuation trend pattern to the downside, and again we've got another naked cross down at the 2103.75 on the 15-minute, and finally on the 5-minute. You can see we've got a very strong downward pattern. We do have a FUBAR Mr. Sneaky Tech Gap, okay, on the 5-minute right now. So there is a reversal pattern showing here with a target up here at the, I'd say 35.50 on the FUBAR, the Mr. Sneaky, and the technical gap. So let's take a look at the big picture on the structure. We have created a week low here though at 34 and a quarter. So again, I'm still seeing some weakness on this market. So we gapped up from this balance that we were in for so long, okay, during the first part of the year. That is centered around the 2035.50, which is the adjusted rolled over composite VPOC that goes all the way back to the beginning of 2013. So the most traded price from January 1st through till now is down below us at 2035.50. Then we gapped up and we had these, these three gaps, came up into balance, traded inside balance, gapped up again, traded up here in balance, tried to hold and put in the new all-time high, and then Friday we gapped down, broke out of the balance that we were in here, and went and closed below the balance here, and then Friday or Monday we took it right back up, and we came, where did we come back up to? Right back into balance in around that 21.55, and we closed just below it. 2-day microcomposite VPOC is 21.51.50, and overnight they've come back and tested back down into the mid of the trading day yesterday, and we're trading 21.34.50 area, and we're showing some weakness coming into the RTH session. We're making new lows. I don't know how many times we're going to come in and be pushing Globex lows or Globex highs coming into the RTH session. It seems to be something they're doing. They're starting to make moves in the Globex again, and then getting the continuation or retracement during the RTH. More importantly, we're in this thin area, okay, that we gapped up through. So we've got a lot of repair work to do, and I don't think we're going to get out of this area as quickly as everybody thinks that we are. I think we're just going to spend some time chopping around down in this area. Of course, above the 30.75, I'd be looking for a push up back into the 21.40.50, 42.50, some resistance, and if we can get above that, maybe a move back up into the 52 and a quarter. Below the 30.75, I think we come back down and test down into the lower 2100s towards those naked crosses, and possibly a dip into the 2000. And the key target below is still going to be that 20.80.50 if we can't get back up inside of this balance and get back above the 46.75 area. So what does that look like overnight so far? We've got a B-shaped profile. That is a long liquidation. So we had a lot of people taking profit overnight. Inventory is net short for the overnight session. What does that mean? That means that if we get above this LVN in the midpoint at 43, some of the shorts could get a little bit nervous and have to cover. We could get a short rally, but not necessarily. We are seeing some continued weakness. So we just put in a new week low, not the week as in time, but weak as in strength, down at 34 and a quarter. I'm expecting that this is likely to get broken. So our overnight low currently right now, if it doesn't go lower before the RTO, we still have 30 minutes. So we could break this this overnight low, but currently it's at 34 and a quarter. Our overnight high is not likely to be challenged, 51.50. Right at the 2-day microcomposite VPOC and just below the VPOC, which we stole into the close. Yesterday was a trend day, so we had a trend day down, trend day up. Usually this is a strong reversal pattern, where we get the railroad tracks, one big trend day red, then one big trend day green. But right now, overnight, we were expecting that with the VPOC shift up to the high, near the high of the day, after being down here at 2150 all day, we were expecting that we'd likely see some continuation overnight. That didn't happen. They stalled right out at 5150, basically where we 2 ticks above where we closed, and went down, and basically have not been able to get back above. Like I said, the 43 area, 42.75 is going to be a key level for us today. $43, then we've got a little LV in at 44. I'm going to use the 43. And then, of course, we've got the overnight low, which is only 3 ticks away. We're likely going to put in a new overnight low while I'm talking. So we'll have to make some adjustments. In terms of the daily ATR, we are expanding still. We're now up to 18.94. So off of the overnight high, our ATR downside target is going to be 2132.50. Which again, we're only a couple points away from that. And then our upside ATR target currently, and it's gonna be adjusted because we're likely to make a new high, but 1894, 2153 and a quarter. Now, what does this really mean today? It really doesn't mean much, gang. Our daily ATR range has basically, been hit already, except for the downside, which we're likely to take out right away. Other than that, there's really not a lot of information. Our Globex VPOC is sitting at 38. And that's about all the information that the overnight session is going to give us. We did have fairly decent volume overnight. So we did have some OTF participation, even if it was somewhat intermediate. So let's take a look at some of the levels. My key line in the sand today is going to be the 30.50. It's going to be 30.50. Why? Well, at 31.75, we've got the low of this range that we were in. And just below that is a CLVN at 30.75. And then I'm adjusting it to the LVN right here at 30.50. So 30.50 is my key line in the sand today. What does that mean? It means that above it, I want to look for long opportunities, and below it, I want to look for short opportunities. All right, and again, we had a trend day, so the value areas don't mean much. So we can't really trade off of the value because value is not found. Just represents when you get a trend day and you see these are automatically 70% of all the volume went off between 56 and 27, but by no means. And here we are putting in a new low. So there's a new low at 34. They make it very difficult when they do this for me, very difficult. Low is 33.25. So we're coming down to test the daily ATR. And it's probably going to continue to expand out. So we're gonna just continue to push on the low right now. Let's take a look at some of the other levels that I'm looking at. Sorry, 30.25. right? 33 and a quarter. What was it? 33. We're pounding on it. Taking another look at some of the levels, there's really not much to guide us down here, and there's really not much structure to trade against. But I'm going to be using 2120. Actually 2121 and a quarter down to 2120. And then below that, I'll be targeting the 1550. And then my next key line in the sand is going to be 2107. This is the one that's going to give us the best opportunity, because if we get back below 2107, I'm expecting for us to test the 2100 and our week low at the 2100 and a quarter. That's going to be a trade area. Below that, we get we're targeting the gap zone, but the first target below is going to be the 98. And then we get the top and bottom of the gap down there, and then the use 8850, 8850. And then below that, I'm targeting our next big area, which is the 8050, the 8350 naked VPOC, 8575, and then our next key line in the sand becomes a 74 down here. All right, those are the levels to the downside. To the upside, there's really not a lot of guidance here. I'd be targeting 40. If we can hold above this 3075, I'd be targeting this this 4050, and then that 43 area, and then above 43, we've got the value area low at 4675. And then above that, I'm looking for the bigger move up into the 51, 52, and that 53. The range high, obviously, will be the next level for the break up towards the, you target the 58 first, range high from Friday. But I would really be targeting this, this 60 and a quarter. And then that tests the value area low of this microcomposite, and then we've got 66, and then 70. I don't think we're going to get anywhere near there today. So what is the main hypothesis for the day? Well, we're going to open auction in range. There's no value, so my main hypothesis is a open auction, or an open test drive. I think we'll take out the overnight low, but my main hypothesis is a move up towards the 38, 40, maybe 43, find sellers, and then rotate us and continue the move down with the main target below being the 23 and a quarter area, and looking to chop in this this low price acceptance area, this really thin area of the composite. We just haven't done enough work. So Hypo 1 is an open auction in range, or an open test drive. I'm expecting a wide opening range, with most likely taking out the overnight low, then a push up into the 40 to the 43 area, maybe 46, but finding sellers and then continuing down and coming down into the mid to lower 20s. That's hypo 1. Hypo 2 is an open auction in range and a push down and either hold the 30 and a quarter or somewhere between the 27 and the 30 and a quarter. We find responsive buyers and we rotate up and can continue the move up towards that 42, 43 area. Maybe a late day probe up into the 46. I'm expecting more of a rotational day today. We found some buyers yesterday, but they did not take control strong enough overnight. So we've got two-sided trading. I expect that two-sided trading to give us a pause day and basically chop in this area, this thin area. Hypo 3 is a open auction failure to get above the 40, 50, and then push down through to the 20 area, fail the 20 area, and come down and come back into the lower 2000s with a possible touch into the 2000s. That's hypo 3. Hypo 4 is an open auction. Take out the overnight low, hold the 30 and a quarter, rotate up, chop around in the 43 area, break the 43 area, put the squeeze on the shorts, and push us all the way up into the 51, 53 area, chop between there and 56 and a late day probe up into the 2160 and a quarter and get another trend day up into that balance that we broke out of. So those are my main hypotheses. We're currently trading below the Keltner center line at 37.50. 31 and a quarter is the Keltner lower line, so that fits in line with our key line in the sand. Let's just see if we put a new lower low in. 32.75 is the overnight low. Currently, we still have 15 minutes. A move above 37 could take us up into the upper Keltner and test that 43 area. So that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.